All right, welcome to this week's Built by Trading trade reviews. This past week, I took 2 trades, that's it, and they both lost. Let me set the precedence here. They were both in VLO, Valero. Firstly, this company continues to make money because of the spreads that it takes between refining oil and then the actual price of oil. Technical analysis-wise, you can see it's been consolidating for quite a while. It broke out. It's only 2.2% of all-time away from all-time highs as of Friday's close. So these are names that you want to look at, right? The 5, I'm going to zoom in here a little bit, okay? Let me orientate you to what you're seeing on the chart. The red line is the 5 EMA. The white is the 8 EMA. The blue is the 21 EMA. The yellow is the 50. And this pink down here is the 200, right? So all of those EMAs are up and they are kind of railroad tracking, right? They're no longer crisscrossing. We have some sort of direction after a nice ignition bar here, okay? So basically what I was trying to do, I was trying to play the breakout. Real simple. Consolidation, breakout. I was kind of treating this as a retest. I think my mistake is that I entered a little too high off the 5 EMA. And this was a true retest on Tuesday. So what did I do? Firstly, I am a breakout trader. I mixed with swing trades also, but I also track my entire universe over here through the ACD method. And so one thing that is important for that is to know that the cumulative number line, which is basically it's a grading system based off of the price action of the day and where things close, that has to be positive, right? And so this is in the green when it comes to cumulative score wise. So what I did here is, number one, here's the breakout of that prior range, okay? I entered here today, sorry, not today. This is the first entry at 271.56. What I liked about it, number one, my mistake is that there were actually a couple of them. This opening range was rather wide. The risk reward was kind of blown out here. And then I also entered, I entered as it broke the VWAP of the day, but it didn't close above it. And I do this stuff, I'm at work, it's hard to manage it, right? So I do this part-time, and I enter when I think the setups are going to go. And I set my risk, which is 1 cent below the low of the day, and I accept my decisions and I let it go. What happened on Tuesday? It undercut my stop, took me out. Okay, I didn't have an opportunity to get back in on the undercut and reclaim. And then Wednesday, it made the move that I was actually looking for, right? And so I'm like, all right, this looks good. The plan is working. Like, this is what I was looking for. I was just a day too soon, which it happens, right? This is why we manage our risk. And so then after this day, I was looking for another potential entry for continuation, right? And that's where this trade comes along here. On Thursday, I entered at 280.78. I entered at the end of the day, right? What I liked about it, again, anchor VWAP, I set this for the beginning of the day, basically. All day, it respected to the downside. I was watching this 30-minute pivot right here. So it failed to move lower. This was around the prior day's pivot too. So it tagged Wednesday's daily pivot, failed to move lower, bullish engulfing, undercut and then rally, bullish engulfing 30-minute. And then I was watching this 280.40 level to break and hold. So basically here, and then I was watching it to break and hold the VWAP of the day. Once it did so, I entered, I guess I didn't circle where I entered at. Let me zoom in here. I entered on this bar here, and I set my stop loss for the low of the day, and that was kind of it. Actually, I set my stop loss a little bit lower. It was on Wednesday's pivot. That's what I did, not the low of the day. And so really my risk per share was $4.26. On Friday, I had an opportunity to move my stop loss to break even while this hit 1R. That's what I typically do. Once 1R is hit, I move my stop loss up to break even at my entry, maybe a few cents, a couple dollars more, so I can at least pay myself a little bit. But at work, I wasn't able to get to it in time. And then it did nothing but sell off on Friday, undercut, tagged the 5 EMA, and then closed basically right at my entry. And so those are my 2 trades this past week. I got stopped out on both of them. I'm 0 for 2 last week. It's no big deal. I trust the process. This is part of trading. Remember, prior to this loss, I had 3 winning trades last week. One of them was like 9R. The other 2 was like 6 and 5. And before that, I had a 6 trades, maybe 7 trades in a row that I lost on. And all 3 of those licked up all 6 and then more. So really, it only takes 1 trade, 2 trades to lick this up. I'm not worried about it. You're going to lose. To have a 50-50 record of winning is actually really good. You really only need like 25 to 33% win rate to be profitable in trading. And so you just have to trust the process. You have to manage your risk, create your trade plans, and be in the right names. So hopefully that's helped. Go watch my FinX video, the names that were popular on last week that I was watching this week. And like, subscribe, comment, ask me questions, and whatever you can do. If you like and subscribe and go watch my other videos, I'd really appreciate it. I appreciate your time. It helps the channel out. And I will catch you next review later.